On the call this morning, S&P futures are mixed as earnings from eBay, F5 Networks, and Intel and Qualcomm failed to impress. Weak China PMI numbers for July sink Asian markets as output declines for the first time in 12 months. Debt woes out of Europe remain ahead of the EU summit on Greece, while U.S. lawmakers move closer to potential resolution to raise the debt ceiling. I'm Scott Redler, and the morning call starts right now. Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com, and I welcome you to my lonely morning call by myself here today. As far as the markets are concerned, I still think that we have some very healthy action. We started a rally on Monday when we held that 61.2% retracement area, had a nice three-day move, buoyed by strong earnings out of Apple, BMW, IBM, some other select key names. And it's okay that some of these names sold some of the good news, because that's what typically happens. What typically happens with these leading stocks, they have big moves into earnings, the earnings come out, they have huge gap ups like we saw in BMW, Apple, and they sell them down or in win. All that means is it needs a rest, it needs a new base. And as far as the indices are concerned, all they had yesterday was an inside day. Spiders went from like 129.63 all the way to 133. That's a nice move in 3 days. So now what I want to do is I want to see some sideways action as we continue to absorb all these headlines across the world, whether it's China's PMI, whether it's Europe still not sure what's going to go on with Greece, whether it's a gang of six with no resolution exactly yet on whether or not the debt ceiling will be raised. So right now the market's on wait and see mode, and as long as the key sectors keep rotating, as long as we see some continuation and commitment to some of these indices, I still think we can go higher. Let's take a quick look at the S&P or the spiders. Spiders held Monday that key area that we spoke about. This was like 129.63. This was the break above this lower pivot that ignited a move all the way back to almost the highs. Then you had a choppy down move to the retest. Nice three-day move. So now I think in order for this market to stay constructive, we need to hold above like 131.50, maybe even down to this 131.30, but we need to hold higher. We need to have a low, a higher low, and then another one to continue this march to where we shall see some resistance as we contend with a new downtrend that's developing. But once we get back to this level, we'll measure it there. As far as some of the other sectors, everything's hanging in there pretty well. If you look at the Qs, which has been leading this market, it failed at the high. So if you look at this chart here, you'll see that it's not a big deal yet. Okay, this scenario broke above the lower pivot, had a huge move, almost back to take out those highs. And look at this retracement. Not too bad. If you look at where the spiders went, or the S&Ps went all the way back down to, to retest this area, here it held higher. So it went back to the highs quicker. Yesterday, with the mega caps selling off, the leaders selling off, you saw an inside day. I would like to see this gap hold to keep the upside momentum. I'd like to see 58.09 hold, and if this level holds, I do think we get some resolution to some of those problems, and we shall make another move through the highs. And even the Russell, the Russell, which is the innovation, it's the small companies, it's where people take some risk, it's hanging out pretty well up here. If you look at the chart, you'll see that the Russell also holding higher. Not as quite as strong as the Qs, but it did come in, hold this area. It actually held this flag breakout versus the lower pivot, so showing you some relative strength. And as long as it can continue to go sideways above 826, this could be on the move. So as far as the indices and markets are concerned, I still think we're hanging